Hello traders, and welcome back to the Forex Geek. Today's lesson focuses on one of the most reliable trend following indicators in technical analysis, which is the Directional Movement Index, or the DMI for short. So this powerful tool helps you determine not just the direction of a trend, but also measures its strength, giving you a clear advantage in your trading decisions. So understanding the DMI will transform how you analyze price movements and identify trading opportunities across any time frame. So by the end of this video, you will master how to use the DMI's three key components, interpret its signals correctly, and implement effective trading strategies that can enhance your success rate in both trading and ranging markets. So without wasting your time, let's get started. First, let's define the Directional Movement Index. So the Directional Movement Index was created by the technical analyst James Wells Wilder in 1978, and that is the same analyst that created the RSI, which is the Relative Strength Index. So the DMI measures both the direction and momentum of price trends. When you see this indicator on your chart, it appears as three separate lines that work together to tell you exactly where the market is heading. It shows you not just whether prices are moving up or down, but also how strong that movement is. So this makes it particularly valuable when you need to determine whether a trend is worth trading or if it's losing steam. Now the DMI consists of three essential components that work together. The first is the positive DI line, usually colored green, which is this line right here. The green line, that is the positive DI line, and this measures upward price movements. So when this line rises, it indicates buying pressure in the market. And the next component is the negative DI line, usually colored red, which is this one. And this line tracks downward price movements. A rising negative DI line signals increasing selling pressure. And the third component is the ADX line, typically colored black or blue. In this case, we're using black. Now the ADX measures the overall strength of the trend regardless of its direction. So this line moves between 0 and 100 with readings above 25, which is this blue line here. Readings above 25 indicating a strong trend. So let's move forward to see exactly how these components work together to generate reliable trading signals. So the primary signal comes from crossovers. When the positive DI crosses above the negative DI, this generates a buy signal. Let's look for that on the chart. You can see this cross here. You see the positive DI, which is the green line, crosses above the negative DI. That is a buy signal. But, and this is a very big but, you want to see the ADX above 25 to confirm trend strength. So this combination increases your profitability of a successful, your probability of a successful trade. So for sell signals, wait for the negative DI to cross above the positive DI, again with the ADX above 25. So these conditions tell you that sellers have control and the downward momentum is strong. For example, you can see this is a bullish signal. You can see after this cross, we have to wait for the ADX line to cross above 20, which is the ADX line is the black line, to cross above 25, and that cross happened around here in price. So we could enter at this pullback or at that engulfing right there. With your stop loss below a significant low like this one. Let me just remove this circle. Your stop loss right there, and take profit could be 1:2 or anyone you choose. Some traders like to target significant resistance levels like this one. So, and let me look for another example. You can see this. You can see this cross right here, and the push above 25 to give us this bullish movement. exactly. So this is the trend confirmation trading strategy, waiting for the ADX line to go above 25 and waiting for this cross, the DMI cross, which is the positive DI crossing above the negative DI for a bullish trend, and the positive DI crossing below the negative DI for a bearish trend. So after that cross and the confirmation from the ADX line, you can enter your trades. Also watch out for chart patterns or other possible confirmations like the moving averages, or using the RSI alongside the DMI to help with trend confirmations and entries. So the next strategy is the ADX breakout trade. So this one, you wait for the ADX to rise above 25 from below and enter in the direction of the dominant DI line. So you use tighter stops due to stronger momentum and trail your stop as the trend develops. In this example, you can see this. See the ADX crossing above the 25 line right there, and you should look to enter trades in line with the dominant DMI line, which is the green line in this case. And you can see that gave us that nice push. And let's look for another one. You can see this was you can see the ADX line, which is the black line, crossing above the 25, and the dominant DMI line is the red line in this case. And you can look to enter your trades in line with this red line, which is the negative DI line. You look to enter a sell trade. You can see from the breakout of this, you enter from the breakout of that support level right there. Your stop loss just above right here. Your take profit could be a 1:2 or in line with a valid support zone. And the next strategy is trading in line with the key levels, which is support and resistance levels. So I'm just going to use the USD card to explain this. So the first step is to locate a valid support level or resistance level. In this case, this is a bullish trend, so I'm going to locate a support level. You can see this resistance turned support level right here, which held multiple times. Held here, and it was a resistance here, but turned support. And the next step is to enter only when DMI signals occurs at that key level. You can see DMI signals here, the positive DI line crossing above the negative DI line with the ADX above 25, and that gives us a valid confirmation that yes, we should be looking to enter a bullish trade from here. If you need additional confirmation, you could use the Fibonacci, placing our Fibonacci from here to this high, and you can see that this level aligns with the golden zone, which is the 61.8% Fibonacci ratio, and you can see that it aligns perfectly with it right here. And you can look to enter your trades from here with your stop loss just below that swing low, and your take profit could be a 1:2 or a 1:3, any one you choose. So remember to avoid trading when ADX is below 25, as this indicates a weak trend or ranging market where DMI signals may be less reliable. The key to success with DMI trading lies in patience, with all components to align before entering a trade, and always maintain proper risk management. So right traders, we've come to the end of today's video. If you found value in this technical analysis breakdown, hit the like button and subscribe to the channel. Don't forget to turn on notifications by clicking the bell icon to stay updated with more trading strategies and market insights. Share your DMI trading experiences in the comments below, and see you in the next video.